Alright guys, welcome back to my YouTube channel. I am Xavier Smith, and today I'm going to go over my biggest mistake as a young investor, and really mistakes a lot of young investors make. And this mistake is that we kind of fall for the hype of stocks going up or cryptocurrency or just like really the new hot thing. And what we want is we want to be a millionaire by like 20 or 23. We don't want to have to wait and get in the S&P 500 and wait like 30 years to be a millionaire. We just want all the money now. So what I've done is I've gone into buying options, which I've every single time I've bought an option, I've lost all my money. Um, then I've gone into like buying hot stocks, stocks that are at their peak, and then they take like a 30% correction, and I'm absolutely wiped out because I put almost my whole portfolio in it. And like crypto, I've tried crypto and I don't like it because I know there's all these people, like people at my school, people I know, they're like, "Hey, should I be getting into crypto? Should I be buying penny stocks?" Because they see like 10% fluctuations and they think that's normal, right? They think they could be a millionaire very soon. They have very high expectations, and I do too. But the problem is, most of us young investors like think we can all beat the market. The problem is we can't all beat the market. The market is efficient because like people can't beat it. Like that's why it's efficient. It is good. So my advice to young investors that are really chasing like new gains and trying to really chase all their money and might lose it in the future because like 90% of individual stock investors lose money over time. What I would suggest is that you maybe put like half or over half of your portfolio into some ETFs or index funds, or maybe even if you're going individual stocks because you don't like ETFs or something, go into a dividend stock, right? Like you could go Ford Motors is like a 7.8% dividend yield. Like go into a dividend stock at least so you have some income coming in and that gives you some like safer money and safer returns, because really going individual stocks, it could ruin your account and you could be behind the people that are just investing like $20 a week into the S&P 500. So what I'd say is put some of your portfolio away, right, in ETFs. And even if you don't, what I suggest is putting backstops for yourself. What this means is you buy a stock and maybe you buy a put for lower. So if it drops, you can still sell, or you put a stop loss order. So like it's at $50 and if it hits 48, you're like, I'm down 4%, I'm selling. You put a max, like max loss 4%. You're not going to lose more than that because if you lose 30%, you're kind of screwed. So if you keep hitting like that stop loss and losing 4% over and over again, it's not going to tank your account. But you're going to realize, why do I keep hitting this? And you're going to have to look at your investment strategy and say, shoot, I'm really screwing up. I'm going into all the hype, but I'm not really doing my own research. I'm looking at what other people are saying, but I'm not doing my own research and buying stocks that I actually like, stocks that I would want to hold on to in the future. So yes, what I would recommend is make an investment plan. Say the risk you're willing to take. If you're willing to take a lot of risk, also just put the max amount of loss you would take in a day or a week, like or on an individual stock. You're like, if I'm down 4%, I'm out. Or if my account's down $1,000 in a day, exit all positions. Right? Just say, okay, what's going wrong? I'm down $1,000 today. You exit everything and just start a clean slate. So again, if you're a young investor, try not to fall into all the hype and like the crypto, because although you can beat the market, it's difficult. I would say invest like half or over half, like 75% of your portfolio into like an ETF, and then you can play around with the rest of that money. And if you are going to individuals, like invest in individual stocks, at least try paper trading beforehand, which is like going on a website that uses actual market data real time, and you can trade with like fake money and see if you would get money or lose money. And your investment strategy, again, just have one. I don't have one, and that's a problem. I have to make one today because I haven't decided like if I'm down 4% on a stock, am I in or am I out? And it leads to emotional investing, and I'm playing with real money. Like that is my future. Because the thing is, if you put that in the S&P 500, when you're older, like $1 now in the S&P 500 could be $10 in the future, because 72 divided by like your average 7% return is like 10 years to double your money. And it's not 100 years, but it could be like 8 times more. So that $300 you lose today would be like $2,400 in the future, like when you're retired. So really try to just make sure you aren't falling into hype and you aren't going to lose all your money. All right. Well, that's the video. Thank you guys for watching. I appreciate it. Like and subscribe if you liked it. And see you guys next time.